Want to start 2026 strong? The end of the year is the perfect time to get your financial house in order. Forget huge, complicated resolutions. Instead, I'm giving you 10 simple, actionable steps to make a massive difference in your finances next year. We'll do this countdown checklist style. No fluff, just straight to the point advice that works. This is about making smart, targeted adjustments for success, covering everything from retirement and debt to your budget and insurance. We'll start with number 10 and work our way down, and stick around for the last one. It's the secret sauce that ties it all together. Chapter 1. Alright, kicking off at number 10, reviewing your beneficiaries. It's simple, but people forget all the time, and getting it wrong can create a nightmare for those you care about. We're talking retirement accounts like your 401k, IRAs, life insurance policies, and bank or brokerage accounts with POD designations. These designations are legally binding. Beneficiary paperwork bypasses your will. You could have an ironclad will, but an old 401k naming an ex can still send them the money. Life changes, marriage, divorce, kids, then people forget to update these forms. Log into each account, find the beneficiaries section, and confirm the names. If they're wrong, submit the update. It takes maybe 5 minutes per account. Add contingent beneficiaries to help avoid probate, so funds pass quickly and privately to loved ones. Number 9. Max your tax advantage contributions. Each year, the IRS adjusts contribution limits for 401ks, IRAs, and HSAs. Know the new numbers and plan to hit them. For example, if the 2026 401k limit is $23,500, aim as high as you can. And don't miss the company match. That's a 100% return. Quick Roth IRA wins. Tax-free growth and tax-free retirement withdrawals. No required minimum distributions, and you can withdraw contributions anytime, penalty-free. Great if future taxes rise. Consider a backdoor Roth. Check income limits. If eligible for an HSA, you get a triple tax advantage, and if you're age 50 or over, use catch-up contributions. Even a 1% increase now compounds massively over time. Chapter 3. At number 8, we're talking about your budget. No, not a 100-line tracker. We're after a quick, high-impact tweak under an hour. Prioritize saving. A solid rule: 50% needs, 30 wants, 20 savings, and debt. If you're below 20% savings, pay yourself first with auto transfers right after payday. Pre-assign windfalls. Decide before the money arrives. For example, 50% to high-interest debt, 30 to investments, 20 to a fun splurge. Find and trim one recurring expense you don't use. Streaming, gym, duplicate news subs. Even $15 a month becomes $180 a year. Redirect to savings or IRA. Cancel once, benefit every month. Automate that freed cash to your goals. This isn't deprivation, it's aligning money with what you value. Small tweaks now, big impact in 2025. Chapter 4. Number 7. Your emergency fund status check. It's your financial bodyguard, one of the cornerstones of a solid plan. Covers job loss, medical bills, major car repairs, so you don't rack up high-interest debt. Target 3 to 6 months of essential expenses: housing, utilities, food, transportation, insurance. Figure your monthly essentials, then multiply by 3 and by 6 to set your range. More stable or multiple incomes? 3 months. Freelancer or single income? Closer to 6. Keep it liquid, ideally in a high-yield savings account, safe and earning some interest. Below 3 months? Top it up. Redirect canceled subscriptions and extra cash until funded. Too much cash in low yield loses buying power. Move excess beyond your target into investments. Give every dollar a job. Don't let it sit on the sidelines. Chapter 5. Number 6. Tackle debt with a clear plan. Debt is a huge source of stress and a major obstacle to building wealth. List every debt, balance, interest rate, and minimum payment. You can't fight what you can't see. Choose a method. Snowball, smallest balance, first, for quick wins. Avalanche, highest rate first, to save the most interest. Set a realistic extra payment, $50 or $100 helps, and automate it after payday. Consider consolidating high-interest cards, refinancing student loans, or boosting income with a side hustle. The start of the year is the perfect time to implement changes and lock in momentum. A clear strategy turns a mountain of debt into manageable steps. Motivation or math. Pick the method you'll stick with. Consistency is everything. Chapter 6. Number 5. Taxes. Proactive planning can save thousands. Review withholding with the IRS estimator. The goal is near zero refund or amount owed. Huge refunds are interest-free loans to the government. Big balances can trigger penalties. Self-employed or non-W-2 income. The US is pay as you go. Schedule quarterly estimated payments. Leverage 401k, IRA, HSA, and FSAs. They're the simplest tools to reduce taxable income. Start organizing now and plan the year ahead. Donations, capital gains, student loan interest. Action items. Verify withholding. Map estimated payments, maximize contributions, create a 2025 tax docs folder. A little planning now can lead to big savings later. Put key tax dates on your calendar today. At number 4, look inside your investment accounts and rebalance. It's risk management, keeping your mix aligned with long-term goals. When markets move, your allocation drifts, e.g. from 80-20 to 88-12. Rebalance by selling winners and buying laggards. Sell high, buy low. Methods, manual trades, watch taxes in taxable accounts, direct new contributions to underweight assets, or enable auto rebalance in your 401k, robo. Set a quarterly or annual cadence and stick to it. Task. Know your target. Check current allocation for drift. And make a plan to return to target. This disciplined process manages risk and keeps you on course for retirement. Chapter 8. Number 3. A comprehensive insurance review. Policies are your last line of defense against financial catastrophe. Needs change over time. If anyone depends on your income, you likely need life insurance. Aim for at least 10 times your annual income. Disability coverage may be even more important. It replaces income if you can't work. Check employer coverage. Supplement if needed. Rebuild costs have surged. Confirm your dwelling coverage. Renters. Inexpensive protection for your belongings. Open enrollment is your window. Compare premiums, deductibles, and out-of-pocket maximums. Pick what fits the year ahead. Action. Gather life, disability, home, renters, and auto declarations. Review coverage amounts and schedule a call with your agent. Don't be cheap here. You hope never to need it, but if you do, it must be there. Chapter 9, Number 2. Big picture check-in. Goals and net worth. Update goals, short, medium, and long-term. Be specific, amount and deadline. Break big goals into annual and monthly targets you can automate. Check your budget against targets. Adjust for 2025. Priorities change. Recalculate net worth annually. List cash, investments, home equity, auto value. Subtract mortgage, loans, and credit cards. Pull current balances. Use rough home value estimates. Total assets and liabilities. Compute the difference. The number today matters less than the trend. Aim for consistent increases year over year. This ritual keeps you oriented to wealth creation and flags issues early. Chapter 10. Number 1. Automate and calendarize your financial life. The moment your paycheck lands, auto transfers trigger to high-yield savings, IRA, and brokerage before you can spend. Automate mortgage, utilities, car payments, and at least minimums on credit cards. Protects credit and avoids late fees. One setup reduces decision fatigue and frees your brain to earn more. Then calendarize, quarterly 1-hour reviews to revisit budget, net worth, and goals. Add estimated tax due dates, open enrollment, annual 10-step review, and credit report pulls. Turning intentions into appointments makes you far more likely to follow through. This system separates amateurs from pros. It removes emotion and runs on logic you designed. Outro. 10 actionable moves to get your finances in order and start 2025 strong. We covered beneficiaries, contributions, budget, debt, and the all-important system of automation. Watching is step 1. Results come when you implement. I've put this into a downloadable PDF, link in the description. Download it, print it, and check items off as you go. If this helped, gently tap like and hit subscribe. It really helps the channel. Consistency beats intensity. Small, smart moves. Over time, build a foundation that lasts. Stick to these 10 steps and start 2025 financially strong. Thanks for watching. See you in the next video.